Well, the U.S. dollar is weakening against the Japanese yen after President Trump confirmed that the U.S. is buying the currency as a, quote, signal of friendship with Japan. Last week, before word broke of the purchase, the dollar was touching 40-year highs against the yen, trading at more than 160 yen. Today, it dropped to 155 yen. The rare currency market intervention by the U.S. is designed to help prop up the yen, which was already struggling and has depreciated sharply this year due, among other things, to rising energy costs from the Iran war.
We have a good relationship with Japan. We're very strong, very, very strong financially. They are, they have a weakening yen, and they wanted a little bit of help, and we're always there for Japan. Japan's been very good to us, with the exception, of course, of Pearl Harbor.
Mr. President,
they were not good.
What is the U.S. getting out of that arrangement?
Financial benefit. Financial benefit. It's also good for the world economy.
Joining me now is Richard Katz. He's a special correspondent for Japan's weekly Toyo Keizai. He writes the Japan Economy Watch on Substack and is author of the Contest for Japan's Economic Future. Good to have you, Richard. First question is this intervention enough, right, to reverse? There are a lot of pressures on the yen at this point. Is this enough, or might it be the first, or need to be the first of several?
Yeah, I don't think it's going to work. The history of the interventions is the following. When a currency is out of whack with fundamentals, then intervention works to bring it back and stop momentum investing. But when it's more or less in line with fundamentals, intervention is kind of useless. Japan's intervened several times. It hasn't worked. And people in the market are saying that this may work a bit longer, a few more weeks, who knows? But it doesn't solve the fundamental problems. And the weak yen reflects weak fundamentals of the Japanese economy.
Let me ask you this. Despite the president saying that this is all about a signal of friendship to Japan, the U.S. has skin in this game as well, does it not? Not just on Japanese or promised Japanese investment in the U.S., but also on interest rates. Can you explain why?
Sure. Well, I don't think it actually has skin in the game on interest rates, and I'll explain why. But the primary interest is that the president is interested in a weak dollar because he believes that will help the United States sell more elsewhere, buy less here. And that's the primary reason. It's really that kind of mercantilist policy. The people say, well, Japan is the biggest investor in U.S. Treasury bonds, and if there's turmoil in Japan, it's going to cause problems here. That's not the case. Japan is actually, it owns about 3% of all of U.S. Treasury bonds in the world. And its share has actually been declining for the last few decades. The Chinese owned a lot, and they've declined a lot. And so whatever happens with the yen, whatever happens with Japanese interest rates, it's really a very tertiary factor in the interest rates in the United States.
So you're not concerned, as some traders are, that if Japan felt pressure to sell treasuries, that would put additional pressure on bond yields and therefore push up rates?
It would be much less of an effect than something that the Federal Reserve could handle by itself. I say when you own only 3% of the entire cash of U.S. Treasury bonds, it doesn't make a big difference. People say that all the time. I think maybe they're trying to do some trades, but it just is not the record. And the U.S. Treasury has been very firm on this for the last 2 or 3 decades.
Tell us about the impact on energy costs, because rising costs have certainly put enormous pressure on Japan's economy. It relies heavily on imported energy. How much is that a factor in the drop in the yen?
Oh, I think it's a very, very important factor, and particularly since we don't know how long Hormuz is going to be blocked. We don't know if the Red Sea is now also going to be blocked because of the Iranian allies there. And so there's a lot of uncertainty. And, Japan depends an awful lot on, as you said, imported energy, not just oil, but also LNG, also coal. These prices all move together. And so when something goes up, if the price of energy goes up 20, 30%, 40%, 50%, then this can impact the yen by several percentage points. And the thing is, most of Japan's inflation, about 80 to 90% of Japan's inflation, is caused by import-sensitive items, mostly food and energy, which are affected in two ways. One is the global price increasing, and one that Japan imports so much of it, and then it makes the yen weaker, and then you get a vicious cycle, and the weak yen makes it even more expensive for Japan. So, this is a very big deal, I think. It's not the only deal, but it's a very big deal.
Well, we'll be watching that yen closely. Richard Katz, good to have you on. Thanks so much.
Thank you very much. Have a good day.